Phil, thank you so much for joining us.
Thank you for having me.
I'm an ex-banker, so banking, runs in my blood. It's my DNA. But I think now that banking 20 years ago or a decade ago is really different than banking today. And the reason behind it is crypto, fintech, and technology. So how do you think that these industries are reshaping the banking industry?
So when we're looking at kind of the intersection between digital assets and financial services or traditional financial services, like there's really like two main use cases that are kicking off. The first one would be like the investments of crypto. So like being able to kind of invest in digital assets and having that distribute, like various different type of distributors get involved and having their customers buy and sell crypto and invest in crypto assets. That's one use case. And then the second use case is payments. Using like crypto assets as payments within financial services is going to be, we think it's going to be a trend that for the years to come. Having these use cases, a couple of things to kind of like consider. One is like, once customers are able to on-off ramp or like purchase crypto assets, right? Then a lot of different financial use cases can then be explored. Like for example, if I have two banks or two big distributors, one in country A, country B, right? And now the first use case may be customers can now buy and sell Bitcoin. Well, you know what? The second use case could be that now I can buy Bitcoin or buy crypto assets or stable coin in country A, send money to country B, and pay out in country B. And now all of a sudden you have a remittance use case.
So the whole ecosystem is different.
Exactly. So once we can get customers or retail and users onto the digital asset universe, these use cases can then be explored.
So what are you finding, Phil, is the biggest challenge? Obviously, when you're working with banks and you guys are providing a lot of the back end, to enable these services to be offered, what are you finding is the biggest difficulty in working with these financial institutions to enable these solutions like payments that you just mentioned?
Yeah, I think a few things. Like one is obviously like on the regulatory side, like making sure that all the different stakeholders and regulations and all the service areas of risks are covered. And that includes like, from the compliance side and all the way through to like reporting, the way that back office works, like all that stuff the more that we can mimic the traditional asset classes, the easier it is for a financial institution to adopt. Because then now like the service area of risk, it's a lot smaller.
So when I look at the banking sector, banking industry, it has evolved, around during decades and to build trust and to build credibility for its users. Today, if you mix that with crypto, to what extent do you think that the mass is ready to adopt these new technologies?
I think on the investment side, I think it's already it's
already happening.
It's already happening. On some of the use case side, like I think the question is more like, how can you abstract out the crypto layer and allow like financial services? And again, like the first step is allowing users to on-off ramp into the digital asset universe. Because then like now, if I have a bank that's distributing crypto, Bitcoin today, which is actually in a way maybe a proof of concept for tokenized assets, now I can now distribute, let's say, tokenized real estate through the same distribution channel, the same infrastructure, the same backend, right? So now like, maybe dividends can now be paid in stablecoin. And actually users don't really need to understand kind of the complexity of crypto, but be able to enjoy the use case around it. And I think we'll get there in the next like 3 years.
Well, that's what we're looking forward to. And that's what the on and off ramp becomes very important. What about regions of the world? When you look, obviously, you guys are operating globally. Are there any particular regions are you think there's more traction, there's more interest, especially when it comes to working with banks and the legacy financial infrastructure?
Yeah, I think like different parts of the world actually looks at crypto slightly differently. In certain parts of the world, let's say the Western world, a lot of crypto is about like investment use case. People buy Bitcoin and buy crypto assets because they believe in the asset class and they want to have Bitcoin as part of their portfolio. But when we're looking at some of the other regions, let's say maybe Southeast Asia, maybe like in Latin America, a lot of the use cases surround like payments. Right, just everyone has a wallet, and they can actually use stablecoin efficiently on a day-to-day life. They treat it as a store of value sometimes because it's a lot of the stablecoins are dollar-based. So we do think like there's like a little bit of the use cases across different regions are kind of happening in slightly different pace, and a little bit of a different concentration, but we do see a lot of these starting to emerge. And this is kind of where UAE is sort of happening, right? With the regulations, with VARA, now like banks we recently worked with like Emirates NBD to enable them to allow retail to buy and sell crypto on the Lyft application. And we look at like some of the payments regulations that are happening in the UAE, a few recent announcements around that. We're starting to see like a lot of these use cases emerge. And I think UAE is actually the center of it and kind of maybe leading that.
And I think this divergence applies as well to regulations and the legal framework. When you compare developing countries with developed countries, you can see that there are some gaps when it comes to the regulatory framework. So when you compare UAE legal framework for crypto and for the banking industry and how it's reshaping the banking industry, to what extent do you think it's important that we align the local regulatory system with what is happening globally?
Yeah, very important, of course. Like crypto is traded, Bitcoin is global, but actually like a lot of the use cases in trading, it's a very localized market. Regulations are localized, banking rails are localized, use cases are quite localized, right? So it's a lot of times, one of the more important things is like even on the regulatory side, it's like, like which side of it leads regulation? Because in certain markets, you see like some of maybe the payment side of the business or the regulatory framework leads the investment side. And in some other markets, like, it may be the other way around. I think in the UAE, what's really nice is like VARA, it's set up to be a crypto regulator that's looking at all these different use cases and actually creating a framework that's that encompass all the different use cases.
This is something, Henri, you keep talking about, which is, we have different priorities. Governments have different priorities, but we have to align them at the end of the day.
And you build it, and they will come. And this is a very good example of that. Thank you, Phil. That was very, very self-intro. That was Phil Sham, the co-founder and CEO of Aquanow.
Thanks for having me.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.